Happy Monday, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And it's time again for our weekly wrap-up. Graham, what can you tell us about the market for last week?
Yeah, thank you, Stacy. Well, I think we finally got a little bit of a pause after this 4-week run in the market. I mean, the indices, the S&P, the Dow, the NASDAQ, they're off, maybe cut their losses in half from the lows in June. So not surprised to see a little bit of pause that I often say refreshes, and that's pretty much what we saw. We saw the NASDAQ were also off a couple percent last week. The S&P was off about 1%. So we saw about 9 of 11 sectors of the S&P down, just last week. Maybe crude oil weakened a bit, even though we have still strong demand in the United States, maybe some fear globally that we might have a slowdown. China, developed Europe, and that maybe brought oil down a bit. If we're talking about the Federal Reserve, I think that we had the Open Market Committee's minutes reported last week, and I think that also maybe gave the market some pause or maybe a question mark about how much the Fed may raise interest rates at their next meeting. Instead of 75 basis points, maybe they go 50, since we are seeing the CPI, the inflation number, coming down off 9.1% as of a couple weeks ago, down to about 8.5. Now that's not back down to 2%, but that is certainly in the right direction. As we always say, this is going to take time to work through the system. Internationally, I think we had some very interesting things hit last week, and that was China really showing some weakness again with the real estate market, and they did lower 2 key interest rate levels down to hopefully spur on growth in light of the dramatically weakening consumer and the real estate market in China. And again, we're still seeing a struggle with some demand in developed Europe, some high inflation, and we are seeing consumer confidence dropping a bit. Internationally, that probably looks like they're going to be more in a recession. We'll just have to see how the numbers work out than the United States.
Okay. Well, do you think that the market's going to pull back from the recent rally? And if so, how much?
Well, I think it's reasonable to expect it to, right? I mean, if the markets are up 17% or 15%, and I'm throwing out numbers here from their lows, 50% retracements from the lows in June, I think it's just logical to expect the market to pull back 3, 4, 5, 7%. And I would use that as a buying opportunity in high quality investments. If you felt like your portfolio had too much growth, it wasn't balanced in the appropriate areas, use the recent rallies that we've had over the last 4 weeks to lower that growth down a little bit and make sure you have the appropriate balance and value to growth, vice versa. If you felt like you're underweight growth, use the pullback to buy high quality growth stocks. Listen, they're never going to be out of favor for the long term, and buy high quality growth stocks, as they pull back a little bit. So as I always say, there's always a market out there. We got to always take advantage of those markets, either taking a little bit of profits on the upside to rebalance, or making sure we're adding to high quality investments on the way down.
Okay. All right. Well, thank you so much,
Yep.
Graham. And thank you to our viewers today. And Graham, I just want to say, it looks like we both got the memo with our navy and pink today. We're twinning.
Here?
So, yeah.
We are. I think we were synced up today.
Yeah. We'll see if we can do that again next week.
A little spot of color, right?
Yeah. Okay. Have a great week, everybody. And thanks for joining us. We'll see you next week on the Weekly Wrap Up.
Take care.